Oh boy, has there been a few changes since the first update of this portfolio. Firstly, we have DS Smith, who were approached by Monday, another company in their industry, to be bought over. They're up 16% in my portfolio. Legal in general, not great, down 2%. Airtel Africa talks about another 10% down, not great either. Pets at Home's doing not too bad, up 3.5%, whilst Breeding is up 3.5%. Now, the good news is we haven't invested an awful lot in any of these companies. It's just the beginning of the portfolio. A lot can change. So, for instance, you can see that in terms of percentage, DS Smith jumped up to 23.5%. Airtel Africa, on the other hand, dropped to 17.4%. Today, I'll be adding another £150 to the portfolio to bring it to the magical £250, which is a number I've used in countless investments of my own. I count in 250s. One of my first jobs paid me $250 a week. So that's kind of where I get it from. What I can also add to it, though, is at £250, if you have an average 5% dividend yield, £250 will actually get you £1 a month, just off the back of about £12 per year for £250 invested at 5%. That's just rough maths. A lot of savings accounts these days will actually get you 5%. But that's been the figure that I've kind of ran with for a while. There'll be 3 new additions to the portfolio today, as well as buying shares for all of these companies. Now, as I said, I don't give strategies or anything. For some people, maybe buying more DS Smith is what you want to do because, you know, it's up 16%. There's a buy over in the way. For some people, the opportunity might be seeing 10% down Airtel Africa and thinking, I will jump at that opportunity. And others play it safe, investing in ones that have just marginally gained or, as I said, marginally lost, like Legal in general. And today's 3 new additions are, we have a mining firm, Rio Tinto, we have the bank that I personally use, NatWest, and we also, well, there's no bias in that, I use a subdivision of NatWest, which is Ulster Bank over here in Northern Ireland, so that's what I use. It's just so happened part of the larger group of NatWest. And they're actually just off the back of some great news. They were trading at about £2, but they jumped on some really good earnings reports to £2.30. But luckily, now that we're going to buy into them, they've actually come down about 5 pence from that height. So not a bad time for me to jump in. As I said, we have £150. And the way I'm going to be dividing it up is £50 is going to go to get a single share of Rio Tinto. £50 will get us half a share of Games Workshop. And as for NatWest here, we should get... Well, I don't want to spend £50 on NatWest entirely because I want to actually buy a few more shares of the other companies we have. So we might be able to pick up about, let's see, what would get it to 10 shares. We'll pick up 10 shares of NatWest today, 11p in stamp duty, reserve tax. Boom, we've got that. Then we can swap on over to Games Workshop, a fantastic stock for dividends in terms of the portfolio. It's extremely healthy. It's a growing dividend yield. A lot of people would argue it's not the best time value-wise to buy. If you had picked this stock up when it was down at £25, £30, you'd be loving it. But then again, Bitcoin, you know, you could have picked that up at £100, then £1,000, and now it's breaching $50,000 at the moment. So, you know, one of those things. Do you know what? We'll actually pick up a quarter of it because the fractional way of buying shares is pretty awesome in Trading 212. The links are always in the description for all the platforms you use. We'll also be jumping over to Simply Wall Street after this. So we'll buy a quarter of it. Gives me a bit more leeway for buying other stocks in the portfolio. As for Rio Tinto, do you know what? We will also buy... We'll buy half a stock of Rio Tinto. Not a complete one. We'll buy half. That means we can actually spend a wee bit more on our portfolio here. And as you can see, it currently sits at 98.64. So we're up 2.5%, mostly driven by the gains in DS Smith and, driven down by the losses in the likes of Airtel Africa. But you can see it kind of, if you dollar cost average or pound cost average, it's not that bad overall, which is one of the ways I personally invest. So in essence, it's called dollar cost averaging, but you can replace dollar with pound or whatever. If the company's in good times, you buy, and bad times, you buy. So basically, say if you bought every month one share of a particular company, in some months you'll buy at probably, a good value. Maybe it's up, good earnings. maybe it has a dry spell, it drops down, but if the supposed idea of it is you get the average overall, which sometimes can beat the market instead of buying low and buying low because stocks are volatile, they go up and down, and it's to be fair, it's risk mitigation sometimes. I don't mind doing it, but as I said, I will buy a few more shares of the 5 that we currently have, so let's go about doing that now. We've spent about £75, so we have 75 left, which is approximately £13 between 5 of our other stocks. So we'll see how much that can get us in terms of legal in general. I love just the process of buying my shares individually. I like doing it. It's one of those things. Some people just put it into a automatic order, which you can do on Trading 212, and they just let it run. I personally love being involved. I love clicking the buttons. Again, for a lot of people, maybe doing it, monthly might be a better idea just in terms of, less time spent clicking things. But for the purpose of this series and talking through everything, giving me a bit more time, weekly at the moment is the best one. It might change monthly later on, but we'll pull up, of course, we've got pets at home. We'll bring them up. £13 will get us approximately 4 shares. Could bump it to 5. Nah, we'll keep it to 4. We'll see what nice round numbers we get in terms of the shares we've got. Airtel is up next. I'm actually timing this quite nicely because the market's about to close in about 20 minutes. It's open, of course, to 4:30 most days here in the UK. So always bear that in mind. If you're ever buying off the US market, of course, different opening times and time zones, things that you have to, of course, consider. We'll buy 13 shares of Airtel Africa. In fact, I'll bump it up to 15 because they are down at the moment 10%. So again, my mindset, good time to throw in a bit more. DS Smith, bring them up here. We'll buy 4 shares of DS Smith. That works out very well. Again, £13 they're up. Some people would buy more. Some would, buy less and hope that they come down at some point, but they have been experiencing quite the rally, up 60p in less than 2 weeks. Will they buy? What will happen if Monday go through with buying them? That's a lot of questions that will be raised, but we'll, of course, work it through, and I'll do a few videos on that and see what way it goes. And lastly, we've got, of course, the breeding group. Got to throw in the construction into this portfolio. £15. We'll stretch it. We can do 15. That's okay. It's an extra £2 over. But we'll throw all these into our portfolio here. So edit pie. Of course, we need to add the slices that we just had. So Rio Tinto, make sure you add the correct one for your exchange. So not the New York Stock Exchange. This one in pence is on the London one. And then we can jump on over to NatWest, add them, of course. And then we'll add our last one, GAW Games Workshop. Big Warhammer fan, painted a few armies, one army. So, I do their business model, and I did so much research into them, and they are one of my favourite dividend stocks because they score a lot of the things that I would look for in a company: healthy balance sheets, looking, good future growth. So if I hit the auto button, which we're not, of course, going to use, it kind of drops a few things down to that. So I'll readjust them here. We're actually faced with a little bit of a choice here. So we're 20% over, so we need to drop. Either we could drop 5% off 4 stocks, dropping them to 10, give them slightly less coverage of the overall pie. We could, of course, we could increase any of them to take up even a quarter. One of these stock could go to 25, and we could potentially drop nearly all of them down to 10%. Again, it all comes down to what stocks you want to prioritize. If I was to do it super fair, I think I could drop most of them down to 12 or 13%. So for example, here are all 8 of them at a perfect 10%. So now we have 20 we can give out if we want to. So with that being said, I would say I'll give priority to 4 of them. DS Smith is going to get bumped up to 15%. I was thinking Rio Tinto, but the thing is, it's not the super most reliable dividend yield. It comes and goes. You get special payments. Mining companies are, a great thing to just have as part of a I can't say that actually, as part of a portfolio, in my opinion, not financial advice, because again, they are some of the biggest dividend payers, and there are occasions when there's good times, they pay out big. But I'm going to pick up some of the safer ones. So, for example, I'm going to pick up a wee bit more Games Workshop. I'm going to pick up a wee bit more of NatWest. Or actually, not NatWest. In fact, what I'll do is I'll go with Breeding. And I'll go with Legal and General. There we go. So that rounds up. Again, the percentages can change. Maybe there's going to be more additions to the portfolio. Again, things will change over time. Now that we've saved that, you can see the holdings are not exactly the way they should be. So what we'll want to do is we'll go to Import Investments and we'll bring in all the stocks that we just bought. And there we go. We've added them all in. As you can see, the top one at the moment is DS Smith Legal and General, and then green Games Workshop, again it being at 15%, but we only have a quarter of a share, so we'll see about changing that up. I'm actually thinking, just the more I'm thinking about it, might put Airtel Africa up to 15% instead of GAW, so drop you, we'll bring Airtel up to a nice 15%. There we go, saving it, and now it looks a wee bit nicer. So again, we're up to 250. Well, just shy of it actually, about £12 down. And with that remedied, I picked up an extra 3 shares of Legal and General, which kind of gives it a wee bit more weight in the portfolio. Again, another great stock that I love. So we'll transfer all this data over to Simply Wall Street and see what it looks like. And there we go, we've added all the transactions over to the UK dividend portfolio on Simply Wall Street. And it can give us a bit of a snapshot. So again, as I said, £252, total value, 8 holdings. We're up 0.6%. But more importantly, the estimated yield's about 5.4%. So £13.73 a year, or more accurately, £1 a month. Again, that's the metric that I've always kind of learned dividend investing from. An average 5% yield, £250 is £1 a month. When you're putting away money, sometimes thinking things like that, for me personally, made it a bit not only easier, but more appealing. We still see it's primarily an income portfolio, but again, with a high emphasis on good value stocks as well as healthy companies. In terms of total shares, I know some of you didn't see that in the previous one. I can show you it here. 33 of Airtel Africa, 9 of Breeding, a quarter of a share of Games Workshop, 18 Legal and General, 10 NatWest, 11 Pets at Home, 0.5, half a share of Rio, and 11 DS Smith. Now, in terms of the companies that make up this portfolio, we can go into the analysis side of things. And it gives us a fantastic breakdown. Again, fair value. Plenty of the members of the channel will know that I'm a lover of the fair value. It's not everything, but it is something great to look at. Price to earnings, not too bad either. And price to sales, again, not bad. So, if we scroll down the diversification, we can see where is everything placed. Now, in terms of telecoms, 12% is Airtel. Consumer discretionary is Games Workshop and specialty stores of Pets at Home. Again, they're very fortified positions. No one's coming to knock Games Workshop off their pedestal of what they do because they have their own wee universe. Again, licensing for games, for movies. Henry Cavill's actually starring in the Warhammer 40k series or movie. I'm not sure which one they're doing as of yet. Pets at Home, I have a strong belief that in terms of the services they provide, dog grooming, essentials, food and all, yes, you can get a lot of it delivered, but in terms of what you get in the store, I think Pets at Home will be here to stay for a long while yet. I doubt the rise of online might have damaged their sales in pet food, but they're adapting pretty well, and ordering fish online isn't something that's mainstream just yet, but we'll see. Anyway, financials, 10% goes to NatWest and 17% insurance for Legal and General. Again, whilst it does say their industry, a lot of these, they sprawl across quite a number of things. The services Legal and General and NatWest provide alone is a lot of coverage across many sides of the financial sector. Materials, again, it does make up a bulk of 40%. When it comes to packaging, of course, with the AS Smith and recycling, basic materials is breeding, construction, and then mining and metals. Again, is Rio, but I like the overall overall build of that. And we can see that Europe makes up a large portion, not reported, of course. It's not, we can't see everything there. In terms of North America, Asia Pacific, Middle East, again making up a percentage. Despite it not being reported, if you extrapolated it to the other half, it probably comes about just right there. And then there's going to be more exciting features coming nice. So we'll be able to do track dividends and a few other things. So I'm excited to see where that is going to go. Financial health, net debt to equity ratio of 173 or 77%. And then when it comes to dividends, again, the yield, 5.4%. Market can be a bit higher. I could have went heavier in some of the higher paying companies, as I said, Rio Tinto and all. But then there's a lot of factors you want to, bring into it. Like payout ratio is 59%. I like that. That's a metric that I like to look at. Whilst dividend growth is at 11.5. So again, this portfolio much higher than the average market rate. So that pretty much covers the update here. Let me know your thoughts in the comments. Anything else you want to see. I am going back to doing individual spotlights on companies. Britvic is one of the first ones. They're a big soft drinks company, and we'll be looking at them. They were going to join this portfolio, but at the sort of after factoring a lot in, they didn't. And I'll be talking more about that in that video as well. Some news and other updates coming. So thank you all for watching. See you in the next one.